Hey Bryce, are you still paying brokerage?
Yeah, Ren, what do you mean?
Mate, brokerage is a thing of the past. Equity Mates have teamed up with our friends over at Stake to offer free brokerage on any trades in America. And if you sign up at equitymates.com/stake, when you first fund your account, we'll put an extra $25 in there to start your brokerage-free trading in America.
Mate, that's not bad.
Yeah. Mate, you know that $25 can buy you 1.6% of an Amazon share?
Now we're talking. So $25 if I sign up an account and fund it and free brokerage and I get to access the US markets.
Yeah, how good?
How good.
Yeah, so stop paying brokerage.
I will. So head over to equitymates.com/stake to sign up. Is that it?
Yeah, that's it. As simple as that.
Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast where we break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
Very good, Bryce. Very good to be back with you.
Certainly is.
Not my best opening, I've got to say.
Not your best.
But probably not my worst, though.
Yeah, not your best, not your worst.
Yeah.
Well, we're going to kick straight back into it. We're going to continue on with our catch-up from the last episode that we were doing. We haven't seen each other for a long time, so there's a lot to catch up on. A lot of stuff happening in the news and stock market at the moment. So without any further ado, Ren, I think the last we spoke about was Walmart and Amazon, and now I think we'll kick on. And what do you got?
We spent like most of the last episode talking about Amazon and Walmart. So
Yep.
let's bring it a little bit closer to home. And the big news that has dominated the financial press over the last week has been the Banking Royal Commission. So some of the big revelations this week were that the big four banks and AMP, the wealth manager, charged more than $200 million for services that they then didn't deliver to their clients.
Whoa.
Yeah, so that's a lot of money when you think, most of those clients will be,
Your mums and your dads.
Yeah, mum and dad's pensions, stuff like that. So that's not ideal. And the week has been particularly bad for AMP. Their CEO, Craig Mellor,
Yep.
has quit /
gone.
been kicked out because it was a pretty rough week for them. So I think it was so we're recording this on Saturday the 21st. So on Monday of this week, AMP admitted to the Royal Commission that they had misled ASIC, the government regulator, 10 times. And then later that week, I think Tuesday or Wednesday, they had to admit that they had actually misled the regulator ASIC 20 times. So
They misled them in telling them that
Yeah.
Didn't this put huge pressure on the chairman as well? Was she the one involved in tampering with the letters?
You're testing my knowledge here, to be honest.
Okay. Continue.
But, as you can see, we're really well prepared and researched on Equity Mates. But look, yeah, to be honest, AMP had a shocker. The Banking Royal Commission, it's finding some pretty rough stories out. I listened to a story about CBA, Commonwealth Bank, who were just feeding this gambling addict like more and more credit lines, and when he even called them up and told them to stop giving him lines of credit because he was a gambling addict and he needed help. And rather than like referring him to, a gambling helpline, they offered him another line of credit.
Unbelievable.
There's a lot of stories about like bad lending standards, giving people too much credit, underwriting bad mortgages. The CBA share price is down about 10% this year. So it's had some effect on the markets watching, but it's probably something that more mainstream media should be covering.
Well, it's a couple of points. It's obviously still early days relative to how long they expect it to go on for, and they don't usually hand down any sort of recommendations until the end, which I think is when it'll probably get a lot more coverage. But it was very interesting following, because from my understanding, they're sort of doing it in chunks. They're still yet to do, or maybe they're just starting it while they're doing AMP, but they're still yet to do the financial advice side of things. And they've covered the mortgage lending and loans, and it was just alarming how, it's come out that a lot of the loans that were given by, as you said, Westpac and CBA were given under circumstance that you would sort of just really raise an eyebrow to, giving it to people that they didn't even ask about their expenses, or giving it to people that were well and truly unable to pay back the loan if it was to, say, go from interest only to interest and principal. And it's going to be interesting to see what the impact of all of this is going to have on sort of the economy if the loans turn out to be bad in terms of unable to pay them back. But what my gut feel with all this sort of stuff, and it reminds me of the episode in Dirty Money with HSBC, and it's obviously not quite as bad as that, but it's probably going to come out that a lot of bad things happened and they're going to get slapped with a fine, and then it's just going to be business as usual, is my gut feel.
Yeah, that HSBC story is very interesting, and we might touch on that a little bit later. So anything else been going on that you want to...
Yeah, this is a very quick one. We don't want to harp on about it for too long because we've already just talked about it in pretty much a full episode, but we'll tie up a loose end with Tesla. We did an episode on it recently, Ren, and it came out during the week that they have halted production on their Model 3, which is the sort of cheaper version, the one that they were meant to be doing on mass scale, hitting, 2,500 cars a week or something along those lines.
Yeah, that's what they were aiming for.
Yeah, so Elon Musk has now stepped back in as CEO of Tesla. He had taken a back step and spent most of his time on the SpaceX side of things, but he's stepped back in now to try and steady the sinking ship, and has publicly announced on Twitter that he's made some mistakes in trying to go too hard with fully automating the production line, and undervalued the impact that humans can have in the process of building these cars. And so he did a Twitter saying it was very underrated. Human capital is underrated, I think he said. So they've halted production on that until they can figure out how they can improve their production line. So another sort of setback for Tesla, but who knows? But
you know what? The share price rebounded pretty significantly from when we recorded our episode a few weeks ago. So obviously the market aren't as worried as you would think that they might be.
True, and who knows? They probably see this as a step of towards righting the wrong, I guess, or getting back on track with Elon behind the wheel again. No pun intended. Anything's possible, I guess. So that's my little tidbit. What else you got, Ren?
Yeah, the Tesla one's very interesting. It's a fascinating story to continue to watch. My last big one is, as a lot of people will remember from our trade war episode, we talked about the little-known grain, sorghum, spelled SORGHUM.
Yeah.
And you know what? We actually broke the news before the mainstream media, so take that, Fairfax. We were talking about China putting tariffs on sorghum maybe even a month ago. And you know what China just announced?
What?
179% tariff on sorghum.
179%.
Yeah, one of the biggest tariffs in this escalating trade war to date. So after our lack of knowledge in the last episode, I did some digging, and I found out that sorghum is relevant for US-China trade relations because when China joined the World Trade Organization, they were allowed to put quotas, so they were allowed to limit the amount that the US could export to China for some of the big crops, so soy, corn, stuff like that, but not for smaller crops like barley and sorghum. So sorghum is used in animal feed and some other stuff, but essentially what was happening was sorghum was cheaper than corn, and so all these Chinese pig farmers were using sorghum rather than corn, and that was disrupting the Chinese domestic industries. So China decided to retaliate. And if you had been listening to Equity Mates a month ago and gone long sorghum, you would have made a few dollars.
Yeah. I wonder if there's an ETF for sorghum.
Yeah, maybe we could make one.
Sorghum price. Hold on.
Yeah.
What's the value of that, I wonder? Do you know?
Like how much does it cost a bushel?
No, what's the import-export value of sorghum between America and China?
Well, you know what? So there was actually an armada of sorghum on the water when China announced the tariff. So what I think has happened is that they decided the grain companies tried to get as much into the country as possible. And so there was 1.2 million tons of sorghum, which has a market value of $216 million on the water. And it was on the way to China, and then most of that has had to be diverted to, I don't know, other markets because China announced the tariffs.
Wow.
Yeah, $250 million of sorghum was disrupted because of this trade war.
Wow. I wonder where it's going to get sent. They're just going to dump it somewhere.
Quickly becoming my favourite grain.
I'm glad, bro. That's really good.
I might have to buy a bushel or two.
I'll send you some.
Yeah,
not that
thanks,
I've got any of it.
I wonder if they sell it at Coles or Woolies.
Well, I've never seen it, never heard of it, but I definitely know about it now, that's for sure.
I think it's more for animal feed than human feed. So any pig farmers out there listening, can you send some my way?
So my final little update before we move on to some books and stuff that we've read, and this seems to be a going trend now for some of the big tech companies in the world. Apple and Google both made it sort of clear that they were going to start pursuing building their own chips, microprocessing chips, the likes of which Intel make. So they've both said that internally they want to start pursuing that, making their own. And Facebook haven't directly said it, but they put an ad out recently asking for people who had skills directly involved in project management in making microprocessing computer chips. So you would think that if you're joining the dots that they're now sort of looking at going along those lines for apparently for servers and hardware that they're also thinking of making. But between all three, word on the market street is that it's because they want to have better control over their AI systems and research and development. So just an interesting pivot from all the major companies. They're now going in-house rather than looking at the big companies such as Intel and NVIDIA and that sort of stuff to make their microprocessing chips.
There you go. Interesting stuff. So bad news for some of the big tech players like Intel and HP and stuff like that.
Yeah, well, I thought that. So I then had a look at the stock price of Intel and some of the commentary around it, and it seems to have made no impact so far. I guess because at this stage, it's very much initial stages, research and design. Maybe Facebook haven't even actually confirmed it. I guess the impact will come on Intel and stuff when, these guys do start doing it in-house and no longer relying on Intel. And so when that'll probably have a top line effect on their profit and stuff, and then that'll probably feed into their stock price later on.
There you go. Nice one. So I guess that sort of brings us to an end of tying up some of our loose ends, some
good to catch up
tidbits that we had that wouldn't fill a whole episode, but we thought were interesting and our listeners might enjoy learning about. Now, speaking of learning, anything that you would recommend our listeners read or watch?
Yeah, so I've just finished reading. I finished Buffetology, which you'd read ages ago. And even though you've done a book review on it, I wanted to read it for myself. Found it really fascinating, so definitely well worth the read. I also pumped out One Up on Wall Street by Peter Lynch, which was a very easy read, but from a value-based perspective and getting an idea of how he picks stocks, because he goes through it in quite detail, it was well worth reading. Quite a small book, so you can pump through it pretty quickly. But one that I am going to read now, I want to sort of start getting a bit of better understanding of technical analysis, just so I can start relating a bit better to some of the guys that we speak to and that sort of stuff. It's something I haven't really pursued. So I'm going to be reading, it's called Secrets to Profiting in Bull and Bear Markets. And then there's another one called How to Trade Like a Stock Market Wizard, and they're both sort of based around trading principles and philosophies in the purest sense. So that's what I've been reading, Ren. What about yourself?
Nice one. I am right now reading a book called Lords of Finance, and it's about it's about central bankers between the First World War and the Second World War.
Is it good? I've had it on my list, but I always skip over it.
It's really good. It's written in a really interesting way, so it's not too dense or anything like that. Fascinating story, like whole lot of stuff that I didn't know about. Like obviously about hyperinflation in Germany in the 1920s. But some of the stuff is crazy. Like in 1923, in a few months, $1 went from 620,000 German marks to 630 billion German marks in just a few months. Prices were literally doubling every couple of days. It was just, like a crazy time. So, really fascinating book. I haven't even got to like 1929 and the Depression yet, so still a lot to go, but a time that I didn't know a lot about in Europe, and sort of talks about like how the financial situation in Britain led to the diminishing of the British Empire and the primacy of the US. So really interesting book. I would highly recommend, and might have some more to say about it when I finished it.
Yeah, nice. I might get on it because it's been on my list for a while, but for some reason I just skip over it. Cool.
Nice one. All right. Well, we're all caught up. We've got some things to read, and hopefully our listeners can pick up some of those books as well. Anything else from you?
I think that's it, Ren.
All right.
I'm all up to date.
Well, until next time, equity out.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.